We are covering these 8 top stocks with big percentage gains today. Our review on CHSN. Chanson International Holding, a name most people might not have had on their radar until now, is suddenly the talk of the small-cap world. For some quick context, Chanson is a bakery and food business with a pretty global footprint. They've got retail locations in both mainland China and the US, offering everything from high-end pastries and artisan coffee to brunch, bar snacks, and light meals. In the US, they operate under brands like Georges Chanson and Pâtisserie Chanson, so there's a bit of that elevated cafe experience going on. Over in China, it's more traditional bakery fare with seasonal and contract manufactured products rounding out the lineup. So they're playing both sides, East and West, and tapping into 2 very different consumer markets. But here's what really kicked things into high gear. Chanson just reported a solid year-over-year bump in financials for fiscal 2024. They posted earnings of 5 cents per share, up from 3 cents the year before, and revenue increased to $18.2 million from $17.3 million. On paper, that might not seem like a massive jump. But for a microcap company trading at penny stock levels, positive earnings and even modest growth can be a major catalyst. And clearly, the market agreed. We're talking about a jaw-dropping 89% move on the day, with a pre-market surge that at one point touched 170%. What's even more eye-popping? Over 161 million shares traded, and this is a name that usually sees volume that's just a fraction of that. That type of spike usually signals a technical breakout, often driven by retail momentum traders piling in, especially when there's a low float involved. Now, this isn't just noise. That kind of price action combined with fundamental improvement raises a lot of eyebrows. It could mean that investors are starting to take a closer look at Chanson's US operations, which offer more premium, experiential dining, a segment that tends to hold up well if executed right. There might also be a growing sense that the company could eventually lean into franchising, more aggressive US expansion, or even a broader rebranding strategy. And anytime a small-cap name starts showing even a little financial traction with that kind of upside movement, it opens the door for institutional interest down the line. But let's keep it real. This kind of parabolic move often invites just as much skepticism as it does excitement. The real test is what happens next. Does the stock find a new base? Do they follow this up with strategic announcements, partnerships, or expansion plans? Or does it slowly drift back down as traders take profits and move on? Either way, Tihin just stepped into the spotlight. And for investors who like asymmetric risk in the microcap space, this one might be worth watching, especially if the story continues to build from here. Our review on MESA. Mesa Air Group Incorporated, the regional airline operator behind flights for United, DHL, and formerly American, just made a huge move that's shaken up the regional airline space. Quick background. Mesa flies to 86 cities with a fleet of E-175s, CRJ-900s, and some 737 cargo planes, mostly under long-term capacity deals. It's a steady player, but definitely not one that usually dominates headlines. Well, that changed fast. Mesa just announced it's merging with Republic Airways Holdings in an all-stock deal to form a major new regional carrier under the Republic Airways Holdings Incorporated name, which will trade under the new NASDAQ ticker, RGT. And the market lit up. Shares of Mesa soared 54% today with 55 million shares traded, and the stock saw a huge 45% breakout during pre-market after the news dropped. Republic's no small fry either. They've been around since the 70s, operate over 240 Embraer jets, and have long-standing contracts with American, Delta, and United. Last year, they pulled in $1.5 billion in revenue and $65 million in net income, a very solid performance for a regional airline. They're also set to add 15 more jets this year, all debt-financed. The combined company is expected to generate around $1.9 billion in revenue and more than $320 million in adjusted EBITDA. Mesa shareholders will walk away with 6% to 12% of the new company, depending on a few pre-closing milestones, and importantly, Mesa isn't bringing any of its current debt to the table, a major win. United is also backing the deal, helping Mesa offload assets and clean up its balance sheet before the close. So, what's the play here? It's all about scale, stability, and getting ahead of the headwinds regional airlines have faced: pilot shortages, squeezed margins, and complex fleet needs. This move makes the new RGT one of the largest Embraer jet operators in the world with over 1,250 daily departures, and it strengthens their relationships with all three major U.S. carriers. For Mesa investors, this merger isn't just a lifeline, it's potentially a transformation. The stock reaction shows the market sees real upside in combining Mesa's footprint with Republic's financial strength. If the integration stays on track and those margin targets hold, this could be one of the more quietly powerful moves in U.S. aviation this year. Our review on NWTG. Newton Golf Company Incorporated, formerly known as Saks Parente Golf, is one of those small-cap names that doesn't often make a ton of noise, but when it does, it turns heads. At its core, Newton Golf is a tech-driven golf gear company. We're talking putters, shafts, grips, the whole shebang, but with a modern twist. Think high-modulus carbon fiber shafts and precision-engineered putters with names like the Deuce and the Prism. They're really aiming at players who care about feel, control, and speed, whether you're a weekend warrior or someone chasing scratch. Today, Newton Golf shares absolutely exploded, up 51% on the day. And while there's no official press release sparking this kind of move, there's definitely some buzz building. Sometimes when you see a move like this in a microcap name, it's either technical momentum, rumors, or a wave of retail interest that catches fire on volume. This feels like one of those moments where traders may be speculating on upcoming news or are just piling in ahead of what they think could be a breakout growth story. What's interesting about Newton is their distribution model. They're not just selling through their website. They've built a presence with Club Champion retail stores and even have a foothold in Japan and South Korea, two golf-obsessed markets. That international angle could be a sleeping giant if they play their cards right. The golf industry itself has seen a bit of a revival post-pandemic, and companies like Newton that bring innovation and a clear niche angle are positioned to benefit, especially if they start getting more traction with retailers or pros. If there's even a hint of bigger retail partnerships or a viral product catching fire, like what we saw with putters in the past from other brands, it's easy to see how momentum could keep building. So for investors looking at today's 51% spike, yeah, it's a big move and maybe even a little frothy. But if there's something brewing under the hood, this could be the early stages of a re-rating on a story that's been flying under the radar. Keep an eye on volume, product reviews, and any whispers of sales expansion. Newton might be teeing up something big. Our review on SPAI. Safe Pro Group Incorporated is a tech-forward holding company with its hands in a few serious buckets: AI-driven aerial data analysis, bullet and blast-resistant gear, and drone-based aerial services. So yeah, it's not your everyday security company. This one's blending cutting-edge tech with boots-on-the-ground protection. Their AI platform, Spotlight AI, is designed to analyze drone imagery super quickly and with serious precision, which can be a game-changer in defense and emergency response scenarios. And today, Safe Pro is having a big day on Wall Street. The stock's up 44%, and for good reason. They just dropped some pretty meaningful news. The company signed a multi-year MOU with Ukraine's Center of Excellence for Mine Action and Environmental Security. The goal? helped tackle one of the most dangerous and large-scale landmine crises in recent memory, and do it with AI. Ukraine's facing an uphill battle with over 138,000 square kilometers of land contaminated by mines and unexploded ordnance. It's not just a humanitarian crisis, it's an economic one too, with farmland out of commission and food production taking a major hit. That's where SafePro comes in. Their Spotlight AI platform has already crunched over 1.2 million drone images and identified tens of thousands of explosive threats. It does this at lightning speed, processing images in under a second and generating GPS-tagged, high-res maps that demoning teams can actually use. So what's the business angle here? This partnership puts SafePro front and center in one of the most critical tech-driven humanitarian efforts happening right now. It also signals growing international recognition of their AI platform as a viable, scalable solution for defense and recovery. That kind of validation, especially tied to a government and military-backed initiative, is exactly what investors love to see in a growth-stage tech defense company. Beyond just the Ukraine deal, this move could open the door to more government contracts, not just in Europe but potentially here in the US and beyond. The use case for this kind of tech, AI-powered, drone-based detection, is massive, and it's only going to grow as conflicts evolve and demand for faster, safer cleanup increases. So yeah, the 44% pop today might feel aggressive, but when you zoom out, this feels like the kind of news that could shift SafePro into a more serious conversation around next-gen defense and security tech. Worth keeping an eye on, especially if follow-up contracts start to flow. Our review on WCT. Wellchange Holdings Co Ltd is a software-focused investment holding company, and while it's not exactly a household name yet, it's quietly been building its business around customized software solutions, SaaS platforms, and software development, mostly through its core subsidiary, CHSN. Think of it as one of those under-the-radar tech plays that's laying digital infrastructure behind the scenes. Today, though it's not so under the radar, shares are up around 28%, and that kind of move always catches attention. The spike doesn't seem to be tied to any flashy press release or big earnings beat, which makes this feel like one of those speculative momentum plays, possibly driven by retail chatter, anticipation of future news, or even just traders rotating into overlooked names in the small-cap tech space. What's interesting is that Wellchange operates in the cloud-based software arena, a sector that's generally been getting more love again as investors shift back into growth stories with scalable business models. So even though there's no headline-grabbing news today, a move like this could be signaling either growing confidence in the company's tech offerings or simply that it hits some radar screens as a low-float, high-upside opportunity. Whether it's the start of something bigger or just a quick pop is still up in the air. But anytime a microcap software name jumps this much, it's worth watching to see if volume and investor interest stick around. If they follow this up with any real business developments or partnerships, that could be the fuel that turns this into a longer-term story rather than just a one-day wonder. Our review on PEV. Phoenix Motor Incorporated, better known as Phoenix Motor Cars, is one of those EV players that sits a bit outside the Tesla spotlight, but they're carving out their own niche. They focus on electrifying the commercial vehicle space, offering everything from medium-duty EVs and electric forklifts to charging infrastructure and even EV kits for partners to build out their own vehicles. With two brands under their belt, Phoenix Motor Cars for commercial stuff and Edison Future for light-duty EVs, they're trying to hit multiple segments of the market. Now today, the stock popped big, up 27% with a sharp 45% breakout right near the opening bell. That kind of move usually gets people talking, and even though there wasn't a flashy press release tied to the jump, sometimes momentum speaks louder than headlines. It could be technical traders jumping on a breakout pattern, or just some renewed optimism around smaller EV plays that haven't already run to the moon. Let's not forget, Phoenix recently launched its third-gen drivetrain, the E300, with up to 160 miles of range, which is pretty solid for the medium-duty space. That kind of innovation, paired with demand for commercial electrification, especially in government and fleet contracts, might be enough to put a little spark back into this name. So while this could be a short-term technical move, it might also be early signs of investors starting to re-rate companies like Phoenix who are positioned to benefit as commercial fleets go electric. Either way, this is one to keep an eye on if you're tracking under-the-radar EV momentum plays. Our review on FAAS. DigiAsia Corporation, a Singapore-based fintech name that's flying a bit under the radar, has been cooking up some really interesting things in the Southeast Asia finance space. They're not just another payments app, they're building a full-blown AI-powered finance platform tailored for emerging markets, which is a huge opportunity. Their whole model runs on this B2B2X strategy, so they're enabling other businesses to embed financial services into their own ecosystems. Think finance as a service, wallet as a service, banking as a service. They're trying to be the digital rails underneath the whole thing. Today, shares jumped 24%, and what's interesting is that the breakout move happened late in the session, up around 25% near the close. That kind of action often signals strong buying conviction heading into the next day, possibly institutions or momentum traders loading up into strength. There hasn't been a big news drop tied to the spike just yet, but this kind of surge could be speculative money flowing into small-cap fintech names, especially with the AI angle and the Southeast Asia growth story getting more attention. They're also playing across multiple verticals, from e-wallets and digital banking to microloans and Sharia-compliant financing, which means they're not relying on one revenue stream. It's diversified and potentially scalable, especially in regions that are leapfrogging traditional banking and jumping straight into digital. Whether today's move is the start of a bigger re-rating or just a short-term momentum push, DigiAsia's long-term story could be compelling for investors looking for early exposure to digital finance infrastructure in emerging markets. Definitely a name worth keeping on your radar. Our review on NAOV. NanoVibronix Incorporated, a small but intriguing player in the medical device space, focuses on non-invasive therapeutic solutions using its patented low-intensity surface acoustic wave tech, essentially portable ultrasound devices that patients can use from home. They got a few products in the lineup, like UroShield for urology, PainShield for pain relief, and WoundShield for wound healing. All are aimed at reducing hospital dependency and making treatment more accessible and patient-friendly. Now, shares were up about 24% today, and while there wasn't a major press release attached to the move, this kind of jump doesn't usually come out of nowhere. It could be a combination of low float dynamics and increased investor interest in medtech names that offer scalable at-home solutions, especially ones tied to pain management and infection prevention, which are pretty hot topics in the healthcare world right now. PainShield, in particular, has been gaining traction in niche markets, and with chronic pain solutions being a huge, under-addressed space, any buzz around adoption or expanded use could light a fire under the stock. Plus, with everything going portable and home-based these days, their value prop is lining up well with broader healthcare trends. This kind of spike may be speculative, but it's also a reminder that NanoVibronix sits at an interesting intersection of innovation and practicality, and it doesn't take much to get attention in this corner of the market. Worth watching to see if today's move has legs or if more news follows. Please subscribe, give the video a like, and watch more from our playlist. Thanks.